Welcome, everybody, to Secret Sauce, the show where we unpack business tips, life hacks, and advice from industry leaders. I'm Karly, iacono. And today I am joined by someone you most likely already know and love, Beth Azor, the president of Azor Advisory Services. Welcome, Beth. So great to see you. How are you?
Thank you, Karly. Thanks so much for having me. I'm excited to be here for the Fast Five.
My pleasure. So glad you could join us. So there are a million different things that we can talk about because you are such an active participant in the commercial real estate industry. But why don't we start with your really core focus, which is retail and retail leasing. And can you give us just sort of an overview of what leasing activity looks like in Florida, how leases have been changing over the last few years, and some trends that you're seeing within retail leasing?
Absolutely. Well, I can tell you that in the Smile States, so that's, North Carolina down to Georgia, over through Florida to Texas, we are on fire. We've got retail tenants calling us asking, do you have any expirations in 2025? That's how the demand is crazy, and the supply is very limited because, unfortunately, because of construction costs and interest rates, the development, I think, will be suspended for the next 3 to 5 years, because if they don't have a shovel in the ground today, and they won't probably for another year until these interest rates correct, which was good news today for the CPI. But so it's crazy and huge demand. Retailers, and the reason that the demand is crazy with the retailers is because of the sales. Rent is a function of sales, demand is a function of sales. And for example, in my home state of Florida, 300,000 people came here last year, and those people have money and they eat out and they spend that money and they have disposable income. So that's just increasing the sales significantly, which then the result is increased demand. So there's this rumor out there saying that the R word is coming. And Karly, I can tell you, not in the Smile States. It's not coming.
You are completely insulated from all recession. If we say it quiet, it doesn't happen, right? Recession.
Yes.
It's not coming to Florida. That's good to know. Great. Maybe we'll all move there if there's any space left. I don't know. Maybe there's no room.
Come on down. We love to have you guys. Come on down.
Are you seeing, because there's no new construction, which is fascinating that you think it'll be 3 to 5 years, it's a pretty long time horizon. Are you seeing rents just skyrocket? Like, how has the competition for space been given these factors?
Yeah, so luckily I own 5 shopping centers in South Florida. I sold one a few months ago, but about 3-4 weeks ago, I lost a tenant, and I've replaced him already. We're in lease negotiations at $10 more a square foot in sales for a 1,700 square foot space, which is a $250,000 increase in value based on a 6 cap, which I think if I sold the center, I could probably get a 5.5. So rents are skyrocketing because of the demand and the lack of new supply. For the last decade, you could not give away ground floor retail of vertical buildings. And the reason you couldn't is because it was the tail that wagged the dog. The vertical resi developers built this retail as the afterthought. The cities required it. So there was insufficient parking, no ventilation for restaurants, no grease traps, weird columns. You can't find space in those anymore.
That's amazing. So what's the breaking point for new construction then? When do you think this trend reverses? Is it just interest rate driven? I mean, we've started to see construction materials come down in cost already a bit, not where we want them to be, but a bit. Do you think it's really because of the elevated interest rates, or is there more going on there?
It's the elevated interest rates and the construction costs. It's the perfect storm. We are starting to see construction costs come down. But I'm doing a Wawa development, and my costs are double what I performed. So that made the triple go to a double, which I'll still take the double. But if I could wait a year, I think those costs would come down further. But I'm not going to do that because I have deliveries that I have in the lease. So the reason it's going to be 3 to 5 years is anyone again, and I'm mostly in South Florida, but anyone that has not broken ground yet we'll wait probably a year, because that's when I think interest rates will start coming down, because we'll get closer to the presidential election. And then as we have seen the construction costs starting to soften, that will catch up. And then people will start putting the shovels in the ground, which then means the stores will open 24 to 36 months later.
You could be right. Yeah. Hate to think of it being that long, but that makes complete sense. So given the available space, we have rents rising. Are you seeing any other changes to lease forms? Are tenants accepting greater increases in the term? Are they doing longer leases? How else are tenants competing for space since it is at such a premium?
So the biggest changes because of the inflation is annual increases are up, right? So, and even with not just with the mom and pops, but the nationals, everyone's understanding that if they want the locations in the great markets, they have to play ball. So there's no more of this 10% every 5-year business. That's going away. You are also seeing not as many CAM caps, because the other thing that really doesn't, it's not impacting as much development, but for property owners such as me, is insurance costs. We're looking at doubling and tripling insurance costs. So even though our rents are going up, in the next year, if our insurance rates were typically $1.50 and now they're going to be $3 or $4 a square foot, that for sure is, I'm not going to put my head in the sand, that will impact the base rent, right? The tenant only cares about the monthly rents. So we landlords and property owners are starting to make changes on those caps on CAMs, and realizing that we've got to get those insurances taken care of. And then our maintenance costs, when you do a cap on CAM, the maintenance costs, all of those costs are going up because labor is going up, because for so long, 2 years, our landscapers couldn't find people to work. So the biggest changes I've seen are the annual increases and the removal of or lesser caps on CAMs and things like that to deal with the inflation.
That was very insightful. Thank you for detailing that. I appreciate it. Where are you seeing opportunity in the market? Sounds like it's still quite frothy where you are, and especially the asset type that you focus on. Where do you see opportunity over the next 12 to 24 months?
What I'm hearing, I hope it's true, that there are property owners that signed loans with variable rates. I haven't seen any of that yet. I keep looking. I'm calling all my lenders. I haven't seen any of that yet. Frankly, I've started becoming an LP in some multifamily deals in B and C class properties in Miami, because those apartments are desperately needed for our tourist service providers. So I'm LPing it with friends that know what they're doing. I don't. And it's really nice to just be giving them a check and letting them do all of the work. So there's a lot of opportunity with that for this particular person who knows the market well. And I'm having fun doing that for a change. So, but I'm hoping that there is some truth to some of these property owners that have these loans that they didn't expect and maybe are a little bit upside down. And for people that have cash sitting on the sidelines, those will be great opportunities.
I hear that frequently, right? Everyone's waiting for the seller that gets into a pinch because of where financing is. And I wonder how flexible the lenders will end up being with those owners when push comes to shove. We don't know yet, right? Because no one's really seen this pain hit yet, but that's the concept. And I think to your point, right, it depends how the lenders view that. Are they going to take a hard line and then there's opportunity for you as an investor? Or are they going to want to work with the existing owners and kind of recast those loans?
Well, what I just told one of my coaching clients today about that exact thing is I said, the lenders that will not work with the borrowers are the lenders that are being called by me and you and 40 other people. It's just like leasing space. I'm going to work with the tenant if I don't think I have a market for a backfill. So if you are an investor and you're calling all the lenders, and there's other people calling, so all of us that want to buy should be calling all those lenders so they know they have people that will step in.
But there's demand. Yeah, great point. So you've been an investor, you've started your own firm, you've absolutely crushed it with retail leasing. You have all these different buckets. And I know that's not all. So tell me what's next and what the future looks like for you.
Well, I am on a mission, Karly, and I want women to invest. So in our commercial real estate industry, when I started 36 years ago, there were very few of us. Well, that number has gotten up to 36%. Awesome. But the number of women investors in commercial real estate is at 3, and that is deplorable. So I am on a mission to get that to 10 in the next 10 years before maybe I retire. I'm 62. Whether I work to 72 or 70, I don't know. But I'm giving myself 10 years to get that number to 10%. And how I'm doing it is when I talk to women and I say, well, do you invest? Yes, I invest in the stock market. Well, but you work in commercial real estate. Why don't you invest in commercial real estate? And there's fear. So I believe that if you see it, you can be it. And so what I've done 2 years in a row is I've had conferences where I put women investors on stage and I do fireside chats. And then we have breakout rooms where different asset class of investors go into rooms and break down a deal, the underwriting, how they pick the deal, what their exit strategy is. And it's been super successful. The woman I mentioned, I'm investing in multifamily. She did a deal 2 deals ago where it was an all women investor group that invested in this multifamily deal. And so I started the conference with the mission of education. And now what's so fun about it is there are women attending that are investing in other people's deals, and there are women bringing deals for us to invest in. So it's becoming a trifold thing, which I'm excited about because my goal is to help women build their wealth and their family's wealth, and they can do it better, especially if they work in the field, taking that knowledge and that experience and putting it to work for their families.
Such an incredible initiative. I absolutely love that you're doing it. And the piece that you mentioned where it's coming full circle, I think that's only going to grow, right? This could really snowball to affect a lot of people in a very, very positive way. So thank you for giving back, and thank you for starting something that is very, very much needed in our industry. I'm excited for you and excited for everyone who gets to be a part of it. So how do people find out more about these events and the coaching and other things that you do? How do they find you?
Yeah, very easy. BethAzor.com or on LinkedIn, Twitter. I'm all over. So if you just Google Beth Azor, you'll find me.
Perfect. And then all the information on your investing summit, I'm guessing, is on your website also.
Yes, it's March 8th in Orlando, Florida. So we would love to have everyone. We've already sold out of the VIP. So we believe the event will be a sellout.
Amazing. So exciting. So share with us before we wrap up today, any other personal tips, life hacks, or things that you think might help our listeners be just a little more productive or successful in their own careers?
Sure. So I have 3 things. So the first thing, obviously, we can't get off of this call without me talking about my moniker of the canvassing queen. So we all of us, even me, sometimes we get in funks. And how I get out of the funk is I literally go canvassing. So, I've been doing this 36 years. I'm 62. I own $80 million of real estate. And yes, I go knocking on doors to a lash lady and ask her if she wants to come to my shopping center. But it gets me out of the funk like that. So get out, just go outside, get some sunshine, and go talk to people. And that will get you out of your funk. The app that I like to use, that it's shocking to me that most people don't use it. I thought everyone used it, but I've been talking about it lately, and a lot of people don't know about it, is TripIt for travel. And it's just fabulous. You can be on the airplane and it'll tell you how many minutes till you land. It updates any delays. It's just super. So, and you can put in the restaurants, the numbers of the restaurants. It's just all in one app. So it's a great travel app for those of us that travel a lot. And then my last hack is I got a Remarkable a year ago, and I'm a writer, and I like to write lists and notes, and I just write a lot. But I had notebooks everywhere, and now I only have one thing. It's very thin, it's awesome, and everything goes into this, and I love it. And it's called the Remarkable. So those are my 3 hacks.
Those are fantastic. I'm going to look into them. So for the Remarkable, does it go to Word? Where does the information go? Is it another interface? You
can forward it to assistants or team members. You can email things, but it has like departments and notebooks, and you can keep everything organized. So you can open up and go, oh, I'm selling this asset. Here's all of the stuff that I wrote on the physical inspection. Everything's all in one place. I just love it.
Being organized is just such a skill. And it really does save you a ton of time to have systems for things. So that's one I think I will order tonight. So thank you for that. Appreciate it. All great information. Loved your market update. I think what you're doing with the women in investing is fantastic. And obviously the apps and tools that you're using are interesting and stuff that I'm sure we can all benefit from as well. So Beth, thank you so much for your time today and for sharing these insights. Great to see you, and we really appreciate everything that you're doing for the industry and everything you've shared today.
Thank you, Karly, for having me.
For everyone listening, that was Secret Sauce. We're so glad you could join us, and we look forward to seeing you again very soon. Have a great day, everyone. Thanks again, Beth.